So let's talk about whether or not you should put 20% down. This is a conversation I have all the time, and honestly, I don't have an opinion whether it's better to or it's better not to. It really just depends. So let me tell you about a conversation that I had with my clients the other day. So they are moving to Nevada from the East Coast. They have a house on the East Coast that they're gonna be selling, but they're not gonna sell it for the next couple months. They're gonna move here, get settled, and then list their house. They have money in the bank without selling, so we're trying to decide, should I put 10% down or should I put 20% down? They're buying a $655,000 house, so putting 20% down means coming up with an extra $65,000. So they know that they're gonna have moving expenses, there's stuff they're gonna have to buy for their house, they're gonna have to make 2 mortgage payments for a while. There's just a lot of unknown. So we're kind of running the numbers for them. Like, they know if they don't put 20% down, they're gonna have to pay PMI. And everybody thinks that PMI is gonna be hundreds of dollars. And for some people it is, but for some people it's not. They have really good credit, they have low debt to income ratio, so overall they're low risk, so their PMI is really cheap. So on their $655,000 house, if they only put 10% down, their PMI was gonna be $63 a month. So for them, once they found out that that PMI was only gonna be $63 a month, they made their mind. They were just gonna do the 10% down. But there's other scenarios too, not just for those clients where maybe putting 10% down could be better. In our market, it's really common for people to offer more than what the house is listed for. They also offer to pay the difference in what the house appraises for. So these guys actually did that too. They said no matter what the house appraises for, they're still gonna buy it for the $655,000. So they could have used some of that extra 10% to cover that difference in the appraisal. So let's look at the difference in payment on a $500,000 house if you did 10% down or if you did 20% down. Okay, so let's start with the 20% down. So this is a $500,000 house. 20% down would be $100,000. You have your closing costs, so let's just say on average about $10,000. So that means between your down payment plus your closing costs, you need about $110,000. Your mortgage payment with your taxes and your insurance would be about $2,768. Now let's look if you put 10% down. So $500,000 house, 10% down is $50,000. You still have your closing costs, which is about $10,000. So now between your down payment and your closing costs, you need about $60,000. Your mortgage payment with your taxes, your insurance, and your PMI would be about $3,205. So there's not one right or wrong answer on whether or not you should do 10% or 20% down. It totally depends on you and your personal situation. So remember to like, share, and subscribe. I'm Amanda Ray with Guild Mortgage.